Hello, everyone, and welcome to our Lithium Outlook panel hosted by Six. The speakers will introduce themselves, then we'll dive into our topic for the day. And afterwards, we'll be accepting questions. As a reminder, you can submit your questions in the chat at any point during the presentation. As always, this summit is being recorded and it will be available on six.com to watch afterwards. Without further ado, Steve, I'll kick it over to you for an introduction.
All right, super, Max. Thanks very much. Hi, everybody. I'm Steve Rentschler, CEO of Nevada Lithium Resources. We're working on a project in Nevada, advanced exploration stage, that we think is going to contribute meaningfully to lithium supplies around 2030.
Carlos?
Thank you very much, Maxim. Pleasure to be here, and thank you everybody for participating in the forum. So my name is Carlos Vicens. I'm the CEO and director of Full Circle Lithium. We are a processing manufacturing company that produces lithium products, and we also recycle lithium from solution from all kinds of feedstock. And we're located in Georgia, very close to the border with Florida, about an hour north of Jacksonville. And that's where all our operational headquarters are located.
Perfect. JT, over to you.
Thanks, Max. Appreciate the opportunity. JT Starzecki, Chief Marketing Officer here at 5E Advanced Materials. We have recently started a small-scale production operation in the Central Mojave Desert in California, where we are producing a primary product of boron, but a co-product of lithium carbonate. Looking forward to the conversation today.
Perfect. So without further ado, let's get right into the meat of the conversation here. So I'll start with you, JT, for this first question. So looking back at the last 12 months, lithium is one of the worst performing commodities. Now, if you look at a 3-year chart, it was actually one of the best performing commodities for a long time. It's been quite a roller coaster, ending right near the starting gate again. So can you please explain the volatility? And we'll go around kind of in a circle here.
Well, market volatility is always somewhat difficult to get your arms around, but I guess generally speaking, so by way of background, I've been in sort of the junior mining and metals space for the last 18 years. We see a lot of these trends tend to happen. I mean, I think you can correlate sort of the peak of the pricing with the adoption and the in vogue of electric vehicles, but also just the expansion of lithium and battery technology. You could probably also map sort of the spike and potentially even the drop with the number of prospective junior projects that are proposed coming online. There's always a correlation between major producers, major mining operations, and the thought or the prospect of junior companies coming into the market. There is a bit of a control flex when it comes to price, based obviously on very simple supply and demand dynamics. I saw something very similar about 15 years ago in the fertilizer space, specifically around potash, where there were a lot of prospective junior potash companies in the market where the economics were favorable. And then as those became more and more of a reality, majors are able to flex their pricing muscle, in essence, make some of the junior players economically unviable. And I think some of the volatility is probably due to some of that. If you look back kind of in a 3-year window, right, you'll see a lot of prospective projects that were being scoped out. The economics made sense. Price starts to level out. And then projects start to have to stand on their own. So I think a lot of that, or at least some of that volatility, can probably be associated with current producers versus prospective producers and how all of that shapes out in the junior space.
Excellent. Any additional thoughts? Oh, Carlos, you're muted actually.
Sure. So I'll take I'll give my 2 cents on it. So I think a lot of the volatility, and there's a saying, I guess, I'm assuming in many industries, but in ours, the cure for high prices are high prices. And if we go back to my predecessor company, Neo Lithium, we were trading, I think, as low as $5,000 a ton of lithium carbonate, maybe I would say 6 months, about 12 months before we ended up selling the company. And this was end of 2021, early 2022. So I would say late 2020s, early 2021. And by the time we sold and going into 2022, the price was on a spot basis almost $100,000 a ton. So it went up 20 times. And the volatility here is because of the expected demand for different products, right? It's very simple. I mean, if you see and believe that you know, the 1.5 terawatt hours that would be needed to fill every single battery plant that's going to be built, and that would include all the EV cars and energy storage systems, then you're going to have to have, you know, 10 million tons of lithium carbonate equivalent being built around the world, and we're about 1 today. So that's a 10x increase, and that's a problem, very big problem. However, having said that, when the price is high, all projects are able to be built and financed. And in this specific case, this last volatility case, when we went from $100 a kilo or $100,000 a ton to back to about $12,000, $13,000 a ton, which was the lowest, and now we've kind of leveled off and gone a higher bit to 15, is that the Chinese, and these are the CATLs of the world, control quite a bit of production in Africa. And the lepidolite assets there were built very fast with very cheap money, and that flooded the market significantly, faster than everybody anticipated. But that's a product that cannot operate at current pricing. So all of those are shut down, and the cost structure there is 20,000 OPEX, just OPEX, let alone the CAPEX to build and so forth. So we're talking about in between $20,000 and $30,000 per ton all in, which is where we see now that the market's recuperating. So all those have been shut down. And that's the way I see it. And you're going to see the price kind of building up to, in my mind, to the 20s into the 30s as inventory tends to dwindle down from these mines over time in China and elsewhere.
Steve?
And I'll throw in my 2 cents. My background is essentially having been on the buy side, right? So the institutional buy side in these commodities for basically the past 25, 30 years. So to me, what occurred in lithium, unfortunately, doesn't make it more palatable, but it's certainly not like it was something out of the ordinary. What's out of the ordinary is that we're just in a fledgling state with this whole industry. And so these swings are exacerbated by the fact that supply and demand really haven't established themselves. We're just starting to get out of the gate. It's almost like being in a horse race, the way I think about it. And it's, you know, maybe it's a little bit later and the gates have opened and the horses are starting to get out down sort of that first straightaway, but they're certainly not at the first corner yet. So there's all this craziness that's sort of going on is the way I think about it. You know, so much of whether something's gone up or down has to do with pick your starting point. And if you pick, you know, $80,000 or $90,000 a ton 9 months ago and we're at 15 or 20, yeah, it looks horrendous. If you go back, say, 2.5 years ago when we did our PEA, you know, we were at $13,000 lithium. Should it ever gone up to 80,000? Well, I'm not sure. That it's back down to 13 now, is that really where it should be going forward? No, that's a slightly different question. I'm sure we'll get to that going forward. But my point is if you simply go back about 2 years ago and you say, okay, if lithium prices were $13,000, what's changed? Well, the big thing obviously is electric vehicles. And I always talk to people and say, hey, if you believe in electric vehicles, right, lithium is going to be an essential part of this whole thing. What wasn't there 2 years ago was the whole Inflation Reduction Act, which obviously gives preferential treatment to lithium that is sourced from, just say, countries that are friendly to the U.S. So those car companies or battery makers will get the advantages of U.S. taxpayer subsidy. Well, that's a big point of distortion. We now have this entire thing going on. Well, where does your lithium come from? Let alone the whole lithium carbonate versus lithium hydroxide, and where's the spot price that's being given today, taken all of these sorts of things. And I bring this all up just to say, and I believe JT said this at the beginning, perhaps Carlos, but if you think, you know, last year, the way I look at it simply was we produced globally somewhere around 500,000 tons of lithium carbonate equivalent. The lowest projections that I see out into 2030, notwithstanding all the craziness that we've seen recently with the car companies, is anywhere from the need for, call it 1.5 to 3 million tons of lithium carbonate equivalent. That is a tremendous annual growth rate that is needed in a very, very complex area. To get these mines up from start takes at least 10 years. We've all seen the permitting issues that different people have. We've seen the problems with jurisdictional risk in certain areas of the world. I can tell you it's not getting any simpler as time goes by. The point is, every time that a mature commodity needs to basically get going more than GDP plus a couple of percent, the stresses on the system start to break it down, and supply cannot keep up with demand. Here, you're asking for the development of basically an entire industry, lithium production, to come in orders of magnitude higher to try to fulfill these electric vehicles. So even though we've had this craziness over the course of the past 18 months, year, whatever, pick your starting point, going forward, I continue to think that we're going to have this effervescence, this bubbling from underneath, because supply is always going to be trying to catch up with demand. So those are sort of my thoughts on what happened last year, and I'm sure we'll want to transition going into the forward outlook.
Yeah, I guess that's a really great segue into this next question, which is pretty much about that. So with precious metals and copper running hot, is now a good time to start considering lithium, especially based on what you're saying with the requirements that all these companies will have to go full EV, essentially. So Steve, I'll start with you.
Yeah, I tell you, it's interesting. I guess the way I would phrase it is not necessarily because copper is starting to heat up is now a good time for lithium. Yeah, they're all part of the, the global electrification story, part of EVs, copper. You need a lot of copper in EVs, et cetera. But even though there's been a very, very strong correlation of commodity, let's just say commodity-related assets, their investment performance has become very correlated over time. They all have their very, very different supply-demand fundamentals. Now, what we've seen, which I think is reflected in the lithium prices, of course, coming down, is the fact that you can get a lot of distortion from certain areas over the short term. And, perhaps it's all the Chinese material that's been coming on. Maybe it's Chinese traders destocking, all this kind of thing that's, I think obviously makes a market. But what you're seeing going forward from some of the other producers in terms of, well, we can bring on all this capacity, and then a few months later, if lithium prices stay, below certain areas, they start to rescind those statements, et cetera. That's all just part of the normal, that's gamesmanship. That's part of, does a producer that has existing earnings necessarily want to jeopardize those future earnings by committing to additional production, in the near term when they don't have to? It's all these things that it's the ebb and flow of something at the very beginning. I think, over the short term, is it possible that producers can bring on brown fields? And for those people, who aren't around this part of the industry all the time, green fields is you go out and you're exploring in the green fields and starting something. Brown fields, perhaps it's closer to your operations or you're increasing existing capacities. Those kinds of increases are easier to do, right? If you think about it, you probably have infrastructure in place, you've had your people working on it, all this sort of stuff, probably have money in the till to help fund it. But by the same token, again, you don't necessarily want to jeopardize the part of the industry that you're in by bringing on too much capacity too quickly. So it's this sort of balancing act. And I think we're going to continue to see that going forward this year. And that's going to be compounded by, I think you're going to see more of the statements coming from the U.S. government. You see that, Thacker just got its commitment from the U.S. government. More of those kinds of things coming out that show essentially an integral commitment from governments besides the Europeans to taking the lithium industry forward. In the U.S., where our project is, I think you're going to start to see essentially a bifurcation of the markets. You're going to see a U.S. price and a rest of the world price for lithium. That doesn't mean it's going to happen in the next 2 months, but I think that's going to be a natural evolution. And as these car companies respond to falling sales now and increasing sales later, I think you're going to see the establishment of essentially, two sets of prices. And that's going to make things really crazy. However, I think they're going to both probably continue to go forward because of the overall global supply demand, scenario, which is there's just not enough time to bring all these lithium mines wherever they are onto production.
Yeah, Carlos.
Yeah, I mean, obviously the lithium industry is a China story currently, and they still control 50% of the market. And that's how you see, again, the volatility, because they control large portions of the supply, and they're vertically integrated all the way from mine to building a car, or building the battery that goes into the car. So BYD and CATL control, I think, 2/3 of the Chinese market, battery market. So that's 2/3. I mean, almost 70% of all the China being built in terms of battery manufacturing, they control it. So they can control pricing. And spot, when people see spot, they see spot China. Oh, spot China is down. That doesn't mean anything about a long-term contract in Nevada or with Tesla in the US. It means something. It is a point of reference in terms of what's happening worldwide, but it doesn't really mean what's currently going on in the entire market. And there's, obviously the European side, the North American side, and the Asia side. And you've seen also with the Koreans and the Japanese starting to be a bit more aggressive. And you've seen a couple deals being announced in the Americas about that, because they're becoming a bit, antsy that Chinese companies are controlling absolutely everything. They continue to control and have been more aggressive in controlling supply. And when they control supply and you're vertically integrated, obviously the cost of lithium is going to be a lot lower, because it's a pass through all the way to the battery, right? But at the end, in the grand scheme of things, in my mind, we need to look at this not as a commodity. I still do not believe, I would not name lithium carbonate or lithium hydroxide or whatever lithium compound you want a commodity. It may become one, in the future, but today it's a lithium chemical, very, very different. Every client has a different spec on what they need. So in order to make an LCE credit, it's going to be very different to make it for company A to company B or company C. We're seeing it in our business, where the specs that we need to meet to sell it back to the client are very different from the specs that we need to put it through our lithium carbonate plant to make lithium carbonate that we can sell to, whomever. I could either be a final consumer or a trader. So I think that the market today has become a little bit soft, in the sense that the negativity because of pricing going down has not helped, but also because some of the North American OEMs, such as Ford and GM, are just not up to par with the companies such as Tesla and the Chinese competitors. They're just not there yet. They're going to be there, yes. So you're seeing a trend of going from a full electrical vehicle that was what they wanted to do, to something in between the ICE vehicle and the electric, which is a hybrid or a plug-in hybrid or whatever type of hybrid. So you're going to see some of those changes evolve over the next few years. You're going to see kind of like a trampoline into the full electrical vehicle. You're going to still see the electrical vehicles being sold, but it's not going to go from your regular gasoline to electrical vehicle, all of them in one fell swoop. So you're going to see some of that happening over time, which is, I think that's par for the course when you're seeing a nascent industry. But one very, very important thing that nobody talks about, and I think it's a massive, massive industry, is the energy storage industry, which is, it could be as big. And if you listen to RoMotion and some of the other, I would say, third-party validators on this, is that it's growing at dramatic pace, both in China and outside of China. And I can see that market equaling or even being bigger than the EV market by mid-30s or into the 40s. I mean, not in the next 4 or 5 years, but we're looking at a market that is a quarter of the total battery storage market. So there is significant room for growth here, and I expect that the market's going to get into a crunch. Is it going to get up to the high? No, I don't think so. I mean, we'll see what that happens, but it's not going to go much lower than it already is. So we basically have stabilized the low end of the market at, let's say, 12 to 15,000.
Yeah, it's a very interesting point, because I know that even Tesla has been saying that they expect their energy storage business to be bigger than their EV business. So
that's correct.
Yeah. JT?
Yeah, I guess, in just thinking about it, and a lot of times when we kind of take a step back and we look at sort of what our strategy is, right? Because we're not a primary lithium producer, but we tend to take a macro view on things, right? And so, it's really easy when you're looking to build a greenfield or you're looking to expand expand a brownfield operation, to sort of look at what the current price is and try and model your business after that. Look, I mean, the demand for lithium is here. It's here to stay. It will grow. Will it peak and will it valley in the next 5, 10, 20, 50 years? Absolutely. Most battery materials or anything related to the energy transition from a component perspective will. I I tend to agree with Carlos that using the term commodity almost, minimizes the importance that lithium is going to play, not only for us in the United States, but globally. So you do have to kind of take a step back. I know when I speak to investors, I often say, look, we have our business case model. You have to take a view on what you think the medium and the long-term price points will look like for lithium. I tend to agree with fellow panelists that we're probably at what would be sort of the low end of the price points. I don't think anybody ever believed that 80,000 was going to be a long-term sustainable price point. It's really easy to model upstart greenfield projects at 80,000 a ton. The robustness in the business model then starts to get tested when you see the price drop as it has in the last sort of 15, 16 months. But I don't think the long-term dynamics and thematics have changed in any way. The need for battery technology across not only the EV chain, but across just the global energy transition is going to be there. It is going to grow. You can take a view on at what percentage CAGR that's going to be. But the long-term view is that it's here to stay. We need more production. Stephen rightfully points out, whether it's a lithium mine or any upstart mine, it takes so long, generally speaking, to get through the mining, defining a resource, permitting process. And then, of course, we haven't spent any time talking about how do you finance these big projects, right? Multi-hundreds of millions of dollars, billions of dollars that have a long-term multi-billion-dollar view. You still have to get over the hump of putting a financing package in place. And can you do that in a way that still makes everything viable? And I think you start to see some of those projects shake themselves out when the price points come back down to earth a little bit. But I still, and I'm probably agreeing with my fellow panelists that the long-term price is going to be higher than what it is at now. We've probably established where the floor is, somewhere around where we are now. But the long-term value and the need for lithium, whatever form it comes in, is still there and will still continue to grow pretty dramatically in the next decades.
So seeing as you're saying that, it's potentially not even a commodity, right? It's very hard to analyze. There's a lot of things that go into this. What are analysts currently projecting lithium prices to be? And do you agree or disagree with their predictions? And JT, you can kick it off there.
So I'll go back and I guess I'll speak from a perspective of how our analysts that cover us, right? And specifically how they model our business case. We've got, a handful of analysts that cover 5E. And while we list lithium as a co-product, it does play, somewhat significantly into our economics. And I guess if you kind of look back at analyst notes and kind of how they're modeling things, you're somewhere in the kind of mid to high 20,000s per ton. I think that at one point there was one analyst note that had just north of 30,000. Pretty much aligns with what Carlos said in a previous statement. So, I'm not a sell side analyst, and any projections I would make on price points, whether it be for lithium or anything else, inevitably is probably going to be wrong. But I can look at what our analysts and any of the analysts and investors that I speak to as it relates to 5E, and I think in that high 20s to low 30s is a really good long-term settling point. And I think, anybody that is in sort of the pre-development or development phase, if you can model your project based on those price points and it still works, then you absolutely have a runner.
Yeah, and if I can add to that, so I think that, I've run my own numbers in some of the mines that I kind of follow, and just to break even, and depends on the investor base, right? So an equity investor listening to us right now may want a 30% return, right? Or a long-term investor, a fund may be comforted with 20 or 21 or 25 or whatever it is. But I was just recently looking at, I think it was last week that I was looking at the one of the largest projects now potentially going to be built over the next few, which is the one from Lithium Americas, Thacker Pass. And this is a $3 billion CapEx, $3 billion. All right. We're not talking hundreds of millions. This is an enormous endeavor. They're using 24,000 long-term price, and they have a 21% return, 2-1. With the current environment that we're in today in the market, 21% is essentially, it's very low. I mean, I don't know who puts money at 20% on such a risky, I mean, perceived as very risky project, on a project that is obviously no other sedimentary or clay deposit has been built yet producing. So it is somewhat risky, even though they've done a ton of work, and I believe that they're going to make it work. But you tend to see that there is some risk there. So is 20% enough? Is 24,000 long-term price enough? Because that's how you need to do it. You're going to have to back into what returns. So is a price 30,000 being, that we're talking about? Is that price 30,000 or is it 35? And by the way, all the projects that are out there today are not the low-hanging fruit projects that have been built over time. And I'm not saying that Steve's project is not low-hanging fruit. I'm just saying that usually as any industry, copper, gold, silver, as the industry matures a little bit, and as you start building more and more projects, the projects that get even built are the ones that are in the higher end of the curve, not the low end of the curve. And even though Thacker Pass is theoretically one of the best on the clay side of things, their operating cost is 7,000. I think it is around the 7,000, and you had to add that capex and all that good stuff. So we're talking about not very low cost projects. So you're going to need significant increase in pricing for any of this new supply to come on board. And like as Steve alluded to, we're talking about 5x, 4x, you name it, 7x growth in supply over the next 10 to 15 years. I just do not see price being anywhere where we are today, anywhere. And it's going to be very volatile. So I would tend to think that the volatility in price is going to continue. Maybe the volatility is not going to go from 5 to 80 as we just had over the last, I would say, 3 years. But it's going to be, maybe it's going to, that end and low is going to be tighter. Maybe it's going to be between 15 and 50 this time around or something like that. And then it's going to be tighter again until we get to one of our ranges between, let's say, 25 and 35 or 30 and 40 or whatever that may look like. So that's the way you need to look at it. You need to kind of back into a price where Steve's projects or Thacker Pass project or whatever the other project is, it has a return for shareholders that is enough to take on that risk. And that's the way I tend to see it very simplistically. I know there's a lot of other macro and things that are happening, and prices are not going to be any easier to build. So that's my 2 cents on that.
Yeah, no, I mean, I'll add to it, just follow on what Carlos said, because I try to simple it, or dumb, I don't want to say dumb it down, but I guess I will. Just trying to make it as simple as possible. I mean, look, the last couple of bank notes that I saw, I think probably no older than 45 days. They were talking about it anywhere from 22,500 to, as you said, I think Thacker used 24,000, and somewhere in there. The only thing I could tell you about the banks, the brokers, whomever it is that if you come back in a year, the odds are pretty damn good that those prices are going to be different, because this is the way I think about it anyway. The banks have got their own business, right? They're in it for investment banking. Obviously, they want to pick the winners, and so the portfolio managers come to them. Obviously, the portfolio managers, if you're you're winning by 50 basis points over somebody else, then that could be your marketing hook. You bring in more assets, then you're getting in the case of hedge funds 2 and 20, all this kind of stuff. To a certain extent, I look at it as it's splitting hairs for a lot of people, because unless you're a professional money manager, it's really about what you as an individual think your reward should be for basically investing in the junior mining space. All I can say is I'm not convinced that there's really a good cost curve for the lithium industry right now, for a lot of the reasons that my 2 co-panelists brought up. And the first of all being is that, yeah, lithium's it is a commodity, it's an element, but you need very, very specific combinations, and not having certain percentages of deleterious other elements in your lithium compounds in order to get a battery to work. That, to me, I think is one of the biggest things that people don't understand about when they see all these projects coming on is, hey, how many of them can actually produce a usable product to go into a battery? But the thing is, if you just pick, say it's $25,000 or $30,000, and you look at most of the junior mining space, if they've got a project that at least has a PEA, and a PEA is, again, right, for those who aren't terribly familiar with the way sort of the industry works, it's your first stab, basically, at assigning economics to an inferred resource. Gives you an idea of what's going on. As you progress to feasibility and then ultimately to feasibility, get a much better handle on your cost parameters, all these sorts of things. However, the entire mining space, and this is not, of course, just in lithium. I mean, this is, you know, copper, gold, though they're starting to respond a little bit because of what we've seen lately with the precious metals, and I mean, even copper at 440. But by and large, there are very few investors left in this area. So that means the market caps of, you know, companies like mine, a lot of the other junior developers is very, very small. So then you say, okay, now this really becomes, you know, does this have to be the best project out of all of them? Not implying that anybody's isn't, but can it handle a 20% IRR? And what's sort of the starting point from there? I mean, I was sort of always taught that the big mining houses, if you could get, you know, 15% after-tax IRR and had longevity in a project to withstand all of the sort of the commodity cycles up and down, that's something that they would be very, very interested in. From an individual perspective, you know, in my opinion, there's lots of money to be made if you can handle the volatility in this area, because that lithium price at $13,000 or $15,000 is not going to be enough to bring these projects to fruition. And that's just going to make that supply gap even worse going forward. And I always go back to this too. What is the opportunity cost for an auto company that is committed to the electric vehicles, and whether or not they're backtracking a little bit with plugins or going forward, they've been ripping apart their internal combustion engine tooling and all this sort of things. They're committed. What's the opportunity cost of not having a battery? And I'd argue it's probably infinite. At the second, it's not like if you're a copper producer and copper prices get too high and all of a sudden transmission lines are going to be aluminum instead of copper. It's just simply not the same right now. So to me, these prices have to be considerably higher. I'm just not, to me, it's not worth worrying too much about if it's 25 or 30. To me, if it's somewhere up in there, the projects that a number of us have are going to be tremendously valuable, and they're going to have tremendous rates of return for investors who are willing to essentially bite their lips during times like this. You know, and I think that's, to me, that's how I would think about it.
And you mentioned the supply side. So getting into that supply side a little bit more, does specifically North America need its own supply? Australia is obviously the largest producer, but they're closer to the Asian markets to help meet those demands. And regarding America, is there not enough already coming from Chile and Latin America? And I'll pass it to you, Carlos.
We're going to need everything be thrown at us. I mean, it's not like, oh, well, let's just pick, I don't know, Argentina, which is doing well recently in comparison. And Argentina was always kind of like the black sheep because of the new president and the way the economy is going. But look, we're going to need every single project that's out there and more. Just on probable and potential projects out there, we're not even going to get to 30% of what we need. Well, let's say not even, forget about 50%, 30% of what we need. So where is that gap of, you know, between, let's say it's 40 to 100% of what we need? That's where is that coming from? It's going to have to come from projects like Sieves in the North America. It's going to come projects from new projects in Argentina, new projects in Chile, every single project that we can see in Europe potentially, all of the ones that are being built in Australia. So it's everything. I mean, it's not like, and not only that, remember, there's only two major, and for people, I'm assuming that people on the call and on the forum understand this, but I just want to repeat it very quickly. There are three major types of resources, right? I mean, in terms of major, right? You got water-based, which is our brine assets. And brine can be, I would say, differentiated in two ways. You got the continental brines in South America, and then you got the petrol brines, which are oil-style deposits in North America, and you can find them in Canada and the U.S., and I'm assuming other places in the world as well. But those are the two major ones. Then you got hard rock, and hard rock is as it is. I mean, you got to crush the rock and so forth. The majority of that is in Australia, and those, like you said, Maxim, are the ones that get exported to China and then further processed there. There are some in other parts of the world, including the US and also in South America, but the majority come from there and in Canada as well. And then you got something in between, which are, I would call, for lack of a better word, the clay assets. There are very few of them that, in fact, there aren't any that are currently in production. There are going to be, and we're going to need them to be in production. And that's a line of risk. So that is a problem. I mean, in terms of, but we need every single project out there to be effective. And, you know, I remember back in the days when we started this in the 2008s to 2012s, the way to differentiate yourself from another project is to essentially throw rocks at the other project. We're better because they're bad. And, and that's not, for me now, I'm applauding every single win. Bad news for one project, and I mean, Steve can allude to this, I hope, is that it's bad news for me. If a project fails, if a project has an issue in terms of technology, it's bad news for us, because then we will all go into this hole, and we really haven't had a win in the industry recently. We had just bad news. There are some, I mean, not all of them are bad news, but there has been significant bad news on the recycling side of processing. You got bad news. You got, there's just simply not enough good news out there in the industry, and we need some of that. So I'm rooting for every single project and processing, I would say, company out there, including batteries and OEMs, because we need all of them to be successful. Not necessarily be, we're not competing who's better, who's not. It's just a matter of, if we can have one that is successful, then they will be good for all of us, because the entire market is going to turn and say, okay, this is a real thing. This is going to continue to grow from, X to Y. So that's the way I kind of see it.
Yeah, Steve? Steve?
Oh, yeah. Sure. No, I mean, I echo Carlos' sentiments. That's exactly how I think about it. I'm rooting for everybody. And I tell people too, in something like this, a portfolio approach is great. I mean, sure, please go out, buy Nevada Lithium in the open market. I would love the support. But the point is, the lithium supply gap is so big. All of these projects need to come on. They certainly all need to advance. I think, I'll just... let me just add for a second. Over the course of the past 3 months, 2.5 months, I've been out marketing. So I was on the west coast of Canada, then I was at PDAC, then I was in Switzerland for a little bit. And what I've alluded to with people after having come back is that I'm telling you, people still don't understand the lithium industry, what I consider to be sort of the basic tenets. And I don't mean that in a bad way. It's just that the understanding, the support from the sell side, which is totally different than it was 15 years ago, isn't there. And people really aren't following it. I think for a while, when prices spiked to $80,000 or $90,000, a lot of the companies, the share prices responded, people were into it. And then, of course, people got out just as quickly when it went down. And Carlos is wise to talk about the three major types of lithium, because it literally does come down to telling that story over and over again. I tell people what we're doing in Nevada, and they really think that what we're doing there at first blush is what's going on in Australia. And part of the thing is that in our industry, there's never been the need for all these different types of things. I mean, you go back in time, the salars, right? The South American salars could take care of global demand. Then you see the Australians coming in with a hard rock. Now you see in Quebec, you see a lot of hard rock discoveries. You're going to need concentrators to, get this stuff up to a battery grade material. Again, that's part of what I was alluding to earlier, was this is a nascent industry. We're just starting out. So the volatility is going to be there. But as an investor, I think one of the big tailwinds that you have is that mismatch means that essentially all of these things need to succeed. So depending upon your time horizons, you can make out very, very well in a number of different areas within the lithium industry. And I urge people to reach out to companies like ours. It will help you understand what's going on, because it is a complex type of a thing, not just with supply demand, but also literally about the commodity / chemical that lithium is. There's a lot of nuances here that can really, really, give people pause. But in the end, when you need 6-7 times something in a very short period of time from what you had last year, you can pretty well be assured that the price of that material is going to be going up. So that's my thought on that.
Mm-hmm. Thanks, Steve. JT, if you have anything to add?
Yeah, just really quickly, and maybe I'll kind of overlay a few different things. But I mean, at the end of the day, the U.S. should always have a desire to be material independent, right? And so when we talk about mining projects, we talk about a couple of different things, and there's going to be constant themes, not only through all three of our projects, but other projects in the U.S. and other projects globally. Is one, what is the end market and what does it look like? What are the economics that play into that? I mean, a few other broader thematics that we also, I think, need to encourage each other on, and you're starting to see this change in the U.S. is the more projects that succeed, it signifies the fact that the U.S. is starting to really understand that we get in our own way in a lot of ways, right? So the permitting process is a big hindrance, right? Because the length of time that it takes to get through the permitting process leads to the economics and leads to a company's ability to stay solvent and stay relevant in a particular market. If you're constantly having to raise money just to keep the business moving forward, but you're not actually moving the production and the execution forward, that can be a real challenge. Right. So in any material, regardless on if it's lithium or anything else, the U.S. should do what it can to try and maintain the independence or its independence, and shouldn't stop until we theoretically get to a net export position. I think the final piece of it is then the reliance upon other countries for the processing of such materials. We see it in both the materials that we produce, right, that there's a geopolitical play here or something at stake that, should we get into more difficult times, where are our products going to come from? Not only that impact everyday lives, but things like our defense and the technology, right? And so, you start at sort of the mine gate, and is there a need for the product? Can we meet domestic demand? Is there a larger global play? How do we then move through the permitting process? And then ultimately, where's the processing done? Those are all important things. And at the end of the day, we should all be rooting for each other, because it does signify sort of a broader acceptance of extraction isn't bad, extraction is necessary.
Mm-hmm. And jumping back to the demand side, actually, a little bit here, the market seems to think that the majority of the demand for lithium is coming from EVs. And because adoption appears to not meet the trajectory that some have predicted, the skyrocketing exponential growth every year, where do you think battery storage and consumer electronics and things like that fit into this, and why do you think the market is missing them? And maybe Steve, start us off.
I think that, to me, out to 2030, it's really about the EVs. And that's why I like to sort of talk to people and frame the whole thing in how much can a commodity, let's just call lithium a commodity here for a second to simplify it, how much can a commodity grow as an industry, really? And of course, if you're starting from a very small base, right, let's just say, you're making 100 pounds of something globally, and say that producer has, again, got a brownfields, and they can double their capacity. They can get to 200 pounds, within a year and a half. Okay, it's a 100% increase. As the base number gets bigger, that kind of stuff gets harder and harder to do. In the U.S., again, last year, I think Albemarle was 5,000 tons a year at Silver Peak. It's a small brine operation in Nevada. Now they're going to try to bring on other mines over time, but even something like Thacker, I think is 50,000 tons, phase one, going to 80,000 tons. By the time it gets there, let's just say they get there in a couple of years, you're still working your way towards anywhere from what I've seen, 1.5 million to 3 million tons of capacity needed. That's only a couple % of that total needed. And this, again, goes back to why we need all of these projects to basically come on. I think what's going to happen is that you're going to see, if you don't have sustained bouts of lower prices, which basically starve the juniors, right? Because when we go and raise money, we do things, we drill, we do the scientific studies, we work our ways up from, PEF to PEA to PFS, et cetera, on and on. You start some of the permitting, if you're in Nevada, it's the NEPA process, because I think it's 87% of Nevada is federal ground, as a lot of Arizona is. You can't avoid that process. It's a lot of money, but you tend to start it a little later. But the point is that as long as we don't have sustained areas or lengths of time of price drops that literally just starve, and it just starves smaller companies out of existence, because the dilution would be too bad, for them to raise the money. Those projects can still sort of stay on track, and they may be a little bit, later than they had originally thought, but they'll get there. And then I think when we get after 2030, Carlos had, to me, hit the nail on the head again. You're starting to hear about all of this stuff, a stationary battery supply hooked up to AI centers and all this stuff. And lithium's going to be a big component of it. The alternative battery structures, I'm sure that they're out there. They're being developed. But, you know, that's like anything else. When you try to commercialize it, it doesn't take 2 years. And every time there's a fit and start with mine development, it just makes things worse. So as I said, you know, I think about 10 years from start to finish to get something in production. That's with nothing going wrong. So to me, it's about the EVs right now. And I think that the stationary, you know, the big power, holding supplies that are going to be necessary for those big centers, not so much the individual stuff, handheld devices. I think it's big industrial scale stuff. But that to me is going to come after the EVs. And even though the EVs may not be up to the maximum amount penetration, they're still penetrating pretty damn quick, globally. And I think that's what you're going to continue to see.
Yeah, JT.
So the EVs are the in vogue sort of thing for everybody, the broader consumer audience to focus on. We haven't spent a whole lot of time in really talking about storage technology and the advancement of that and all the product that's going to need to go into the testing and the maturation process for storage technologies. There's obviously the consumer side of everything. One of the things I was thinking about as Steve was speaking is, for us, right, or just generally speaking, EVs are what people think of when they think of lithium, but there's so many other components. And then my mind goes to rare earths. And while the rare earths component does play into motors and battery technology, really the driver for rare earths right now is wind turbines, right? And so we're seeing a lot of the growth for light and heavy rare earths come out of that sector. And so, it's really easy for people to say, oh, okay, well, the EVs, if the forecast for EVs goes up, so it's going to need the need for lithium. If it drops down, then obviously the lithium demand is going to drop. But that really isn't the case. It's the one thing that the broader consumer audience can point to and look at and say, yes, this is why we need it. But in reality, the opportunities to place lithium globally go far beyond that. And like Steve, we tend to take a view that'll take us through to 2030. And we get asked the questions all the time. Well, production is down, EV production is down this year. Does that mean, that your business case is impacted? Look, you have to take this thing in 10 and 20 year bites and look at it from that view, because it does take so long to get these productions, up and running. But EVs is really the tip of the iceberg, right? There's another cycle coming after that for other products, consumer-based products, and then there's another cycle coming after that. So look, it's here to stay and will only grow regardless of a year-to-year fluctuation in EV demand and purchases.
Charles?
Sure. So I think that by 2030 we're going to have a significant impact on energy storage, to tell you the truth. And it's not like I disagree with what Steve said. I think that, look, the lithium story is electrical batteries, period. Where those batteries go, I don't really care, to tell you the truth. If they all go to the energy storage system and we're at the same amount of supply needed, that's fine by me. But if the more I hear about energy storage, and in fact, just this past month, China again came out and said that their energy storage business doubled in 1 year. Doubled, not 30%, 100%. Now, granted, it starts from a lower base, right? So the doubling is easier than if you're doubling, I don't know, 1 million tons of lithium carbonate, right? Production. But in any case, what I'm saying is the energy storage business is growing and growing significantly. And why that's the case is because, and that, I don't want to complicate the subject, but the battery technology is also an important fundamental part of the story. You got different types of batteries. You got the LFP batteries, you got NCM batteries, you got NCA batteries. So I believe that the future for lithium-ion batteries, and I say this with, I guess is my opinion, it is an LFP future. The LFP is going to be the winner in terms of the different types of batteries. Why? Because they've been demonstrated that they can be done cheaper, safer, faster, and the energy density of these batteries have now become very comparable in terms of pricing with the others. So, and when you want to drive this in mass on the electrical vehicle, for example, you're going to have an LFP battery. There's no ifs, ands, or buts, at least at this moment, in terms of technology. So for the $30,000, $40,000 car that people will buy, I mean, normal people, because, you know, $100,000 cars are going to be very expensive, or even $70,000. In fact, in Europe, I was just hearing a podcast yesterday that the average electrical vehicle car there is about 45, and the average vehicle being bought in Europe is around 30 to 35, which are ICE, you know, internal combustion engines. Now, that's a problem in terms of the cost of people trying to buy these cars. They may want them, but do I want to spend 10 to 15 grand more for a car? Yeah, it's not easy. So all that to say that even though electrical vehicles are what everybody thinks about lithium-ion batteries, do not forget about energy storage, which it is going to be enormous, and it's going to be very big and growing everywhere around the world. And we're going to see that happening sooner rather than later, because if you see some of these cars going back a little bit, taking one step back to take two steps forwards, I see that. I'm not saying it's going to go way back. If you see some of these electrical vehicles going into potentially hybrids, and when I say hybrids, it's not that we're going from a battery of 50, 60 kW or kilowatt hours to 2. No, we're going from 50 to 60 to, I think hybrids now, I know it's going to be between 20 and 25. So we're basically cutting the battery in half in terms of power. But it's still an enormous amount of lithium needed to do that battery going forward. And if you get that going, and if you build that market in order to get to the electrical vehicle, that's when you're going to see an enormous amount of batteries being built. And obviously the supply will have to try to meet that demand, which, you know, are going to come from two large buckets, I would say: the electrical vehicles and energy storage systems.
Mm-hmm. And now, not to get too political here, and feel free to answer like a politician, but do you think the upcoming American election, and talking not just the White House, but Congress, will have an impact on the price of lithium vis-a-vis EV pickup? So I'll pass it to JT here for that one.
Election years are always interesting, right? You know, when you look at the various departments within the U.S. government, what agendas are likely to come and be center stage and to the forefront, you know, it's anybody's guess. I would say that agendas don't dramatically change regardless on who sits within the White House or who dominates Congress. I mean, I think it's pretty safe to say that the energy transition, generally speaking, is here to stay, right? And it's not just a U.S. thing, it's a global thing. Now, what degrees the agendas and or the policy, which is ultimately the budget, that supports that transition in this country, I think is what is up, you know, is up for the debate. I think it's also when you kind of look at what is the broader use for materials that we're mining, right? Do you delineate between, does that fall in the energy transition? Does that fall into the bucket of reshoring critical materials as a whole? And how does that impact different agendas, right? Does it fall into defense spending, and or do those materials then play into, you know, items that are ultimately built and utilized for our national defense? I mean, all of that is up for debate. I think but I go back to my earlier statement that regardless on how any main election shakes out, it's here to stay. Consumers demand, you know, to various levels, they demand products that are going to need an increased amount of lithium. Again, you can have the debate on how much that is going to be, but the EVs are here to stay, right? We also need to make upgrades to our power grid to support that growth. That's certainly going to play into it. But, you know, I guess generally speaking, I would have a view that regardless on how the elections shake out, it's still part of our national agenda. Reshoring is definitely part of something that any government is going to be focused on. You know, and the only thing that we might see is sort of where does that fall in the priorities, right? Is the IRA Does that continue? Right? Does the Ukraine Supplemental Act get re-upped, and is there more budget dollars associated to that? So while there's going to be, I assume, a shift in policy or funding amounts based on who ends up winning that particular election, I don't see the agenda massively shifting in any sort of way that has a deleterious impact on upstart mining companies like you're interviewing here today.
Mm-hmm. Carlos, what are your thoughts on that?
Well, I'm not an American, but I'll give we do have the plan to the U.S. I know Steve will have a much better analysis on the political side. I think it's hard to say. I mean, obviously, Trump is not a not a big fan of electrical vehicles in terms of pushing it down the throat of people. I think he's in favor of industries that can make money for people. Period. I think he's pretty pragmatic on that, which is fine by me. So let the people decide which vehicle is better. But we do need. I mean, the IRA obviously had a benefit for everybody in the industry, and you can see that throughout the. I would say the results and announcements that you've seen over the past few years or a year and a half, where I can't remember now when it came out, and you're going to see that going forward. And I think that's already out in the public, so that's not going to change too much. So that's going to continue to evolve and give a little bit more oomph to the industry. So I don't see it as a major change. I think we do still need help in certain instances from the DOEs of the world, the DOTs, and even the DODs. When I say DOEs, Department of Energy, Department of Transportation, Department of Defense, all those three work in tandem for the critical materials. And I don't think the next president, if it's Trump or whomever that may change the tune on that. They may focus on potentially bringing more oil production to the U.S., which is, again, that's not a bad thing. I mean, yeah, that's something that they should work on, but not necessarily that won't kill the lithium industry. I think we have a business that can withstand any changes on that front. So I don't really see the demand for lithium and lithium-ion batteries changing so I think that ship has left the shore in my mind, and I think that's this is an industry that stands by itself going forward. So no change for me.
Finally, pass things over to you, Steve.
Yeah, I sort of think it's a Goldilocks scenario. Surprisingly, it's look, I've never seen the money get taken back out. I mean, the budgetary process is a blood sport in the U.S. And all that money that went in, a couple of years ago, to me, is there. Will priorities change if Donald Trump gets in? I think so, but I don't see this as mutually exclusive. I think as a pragmatist, it would sort of be like, okay, it's a done thing. It's more going to be a push versus pull thing. I think a lot of people feel that EVs are getting pushed down people's throats. I think if Donald Trump gets in, it's going to be more of a, okay, we're going to pull you along. The money's there. We're going to try to make everything work more efficiently. The states are going to play a bigger role. If you have a project in certain states in the U.S., I think you've got a natural advantage. I think Nevada is one of them, but that's not the only one. And that's because some of the governors are very, very forward looking, or they have a historical precedent from their state to be friendly towards mining, and others don't. But I think that when you look at it, it's like moving a battleship. You hit the rudder, but that doesn't mean everything turns. It takes time. Here, the money is already been sunk, but the U.S. administrative state doesn't know how to properly apply it. I can't tell you how many times I continue to look at those DOE tranches of money that are coming out, or whatever, for critical materials, and it specifically says not for developing a mine. That kind of stuff has got to change, right? Not everybody can just build a battery plant. What good is it if you can't put any material through it? I think going forward, people are going to be scared. What if Trump wins, et cetera? That's the end of the lithium industry. I don't see it like that. I think, if anything, it's going to make a developer's task easier, and I think that's going to be good for lithium investors going forward.
Okay, interesting takes. Appreciate it. Let's get into the more company-specific questions here, just before we run out of time. So, Carlos, I'll kind of pose this question to you here first. So Full Circle is working with companies that produce a significant amount of waste containing lithium, which you then recycle. Do you find that the current market is a challenge for finding new customers, seeing as the lithium byproduct is not as valuable as it used to be? Or does the market understand everything we've talked about today?
No, not really. I mean, I think that some of the customers and the companies that we're working with understand the fact that, you know, maybe they're not losing as much lithium in the waste that in terms of monetary amount, but they understand for a fact that they're inefficient in the process. 15,000 today is not low by any stretch. So they would most definitely want to be more efficient in that process. And they also understand that the price is going to go up. They've all said that. I mean, we're lucky to be paying low amounts now, but we don't know where that price is going to be. So they really don't have a view on terms of pricing. So it is obviously they may do things a bit slower now, that they're not losing as much as when it was 50 or 60 or 70 or 80,000. But they most definitely still see that there is an efficiency in their I guess in their systems and in their processing side of things, and they want to fix it as soon as possible. So I don't see a slowdown there at all. One of the things that we have seen a slowdown is just because the way pricing is the battery recycling. Battery recycling is and will continue to be to a I would say, we'll see how long it goes, a problem in terms of making returns there, right? And in terms of how the cost of batteries that you get to recycle and the amount of recovery that you do within the recycling side of things and the processing and so forth. So there's a lot of unknowns there. So we have a different type of process, and I'm not going to get into that at this point on that. So that's obviously on the go. But one of the things that, at least for us, is that we internally use everything that we recycle within our processes. So we don't necessarily need to sell anything outside to make money or to make a return, because we utilize some of the materials that we recycle within the battery to make other things that, you know, within our processes. And that makes it a lot easier for us in terms of cost structure. So that's an important part of our business model. And I think that's going to do well. If the price goes up, even better. But even nowadays, I mean, it obviously helps us with the cost structure.
Mm-hmm. Perfect. Thank you. And JT, lithium carbonate isn't 5E's primary product. It's boron. Can you quickly, for the audience in the room, just give an overview of the boron market and its primary applications in defense? What does the demand look like in the coming 10 years?
Yeah, absolutely. As you rightfully point out, boron is our primary product. Where boron really has a play in sort of national defense is in what we call derivative products. So a general input, so you mine the natural borate, much like you would mine hard rock spodumene. In most cases, our case, we're doing in situ leaching, so it comes out as more of a brine. It actually comes out as a pregnant leach solution that we end up crystallizing. That crystalline product becomes boric acid. That boric acid then gets put into things to create an elemental boron, a boron oxide, or a boron carbide. And all of those derivative products have some sort of input into the creation of things like Kevlar vests or, you know, body armor, tank armor, things like that. So really where sort of our play is specifically, we don't, the government is starting to really get behind our project now, especially since we've commenced production as of the first part of this month. But we aren't chasing the typical Department of Energy avenues. We have been focused our strategy on Department of Defense because there is about 100 different applications in which boric acid, which is our main product, goes into the as an input into these derivative products, which coincidentally the U.S. Department of Defense in some cases is 100% dependent upon China to get these derivative products to go back into national security. Boron carbide being the primary component and really a single point of failure in the supply chain.
And for Steve here, Nevada Lithium looks to have one of the biggest high-grade lithium deposits in the United States, but at lower lithium prices, it's hard to justify work on deposits that aren't hard rock or brine. How do the economics play out at current prices for you, and what are your expectations for the economics to change in the coming years?
I think, let me just change a couple of things. First of all, we do have one of the largest resources globally, but I wouldn't consider what is it now to be terribly high grade in comparison to other projects that you see out there. And to me, that's a consequence or just simply a circumstance of the fact that you've got different kinds. Spodumene is going to be higher grade, some of the brines tend to be higher grade. But if you were to look at it in a vacuum, that would be one thing. But you look at how this is all wrapped up in terms of the economics, and that's where our PEA, and then later on we're progressing towards a PFS. That's where sort of you really can tell the whole story. You know, our PEA was done at very low lithium prices, which are, let's just call them where they are now. And it showed that it was, you know, we had a massive net present value. Now, again, it's been 2 years since we've done that. There's been inflation. You know, a PEA is, again, sort of your first swag at getting those economics. And the costs are going to get better defined, et cetera, all these kinds of things, production techniques as we go forward. But, you know, I would say we wouldn't want to go, you know, down into the single digits with regards to prices. But again, I think for all of the reasons that you've heard from the three of us so far, we certainly don't think that there's any reason to think that would be possible for the long term, because there simply won't be a lithium industry going forward. We have tremendous sensitivity to higher lithium prices, you know. And the thing I always tell people, again, as investors, is, you know, your investment or value proposition is, you know, what's the value of the company now when you buy a share? You know, is it very small in comparison to, you know, what that NPV of the project is? And over time, would you assume that essentially the company's overall value is going to accrete towards the net present value? Typically, that's what you would do. And from there, you can start to shave. You can start to say, you know, I don't think this part, maybe this part. You start to put a risk assessment to it. But there's currently such a mismatch between what the lithium prices are now and what they need to be. There's no way we're going to stop work. I mean, you know, again, remembering the way that junior resource development goes, you know, you go through a financing, you do as much as you can. You try to be opportunistic when you finance again to minimize dilution. It's a very, very dynamic thing. That's the other thing that I just want people to tell you. You know, when you see things that occur, like an announcement, Carlos mentioned some of the more recent announcements from Japanese or Koreans in terms of offtake or getting involved, JVs, et cetera, that probably took years to put together. But I guarantee you that there was a bunch of stuff going on a couple of weeks previous to that announcement. Very, very dynamic. So, you know, we're not privy as the CEOs or management of these companies to tell the public everything that's going on. And that can make it very, very difficult to basically show the value proposition at any given point in time. That's just the way it is. And that's where, you know, essentially the value of your trust in management comes in. But with regards to the Nevada Lithium, we're not stopping work. We're moving ahead. And for all the reasons I outlined previously, we see just a tremendous value proposition as we go forward.
Excellent. Thank you, gentlemen, for those wonderful responses. This is all the time we have for today. I know we have a couple questions that remain unanswered in the chat, so we'll make sure that the speakers here respond accordingly after the event. But thank you all for taking us through this wonderful panel discussion. So I want to thank everyone and just pass it for kind of last closing thoughts, if you have any. Take it away from any of you.
Okay, I'll start. Well, thank you very much for everybody to participate. Like Maxim said, and Steve said, this is not an easy kind of industry to talk through in just about an hour. There's a lot of, I would say, details that we glanced over. But at the end of the day, I think I kind of, maybe I speak for everybody here, but we do very bullish. Obviously, we do work in the industry, but I mean, there's a lot of truth to that. There's a lot of verifiable proof that with the current demand that we're seeing out there in the market, both on the energy storage and on the EV side, we believe that prices are going to continue to go up over the next, I would say, 12 to 18 months, if not sooner. And you're going to see a significant re-rating of a lot of the equities along with that as the price goes up. So, you know, we envision that happening sooner rather than later. And just recall that when I was at NEO, where the price went from 5,000 to 80,000 in less than 12 months. So there could be a very change very quickly here. Not necessarily that's going to happen this time, but I can say that in these nascent industries, that's what usually happens. Everything happens quite fast. So I appreciate everybody participating. Happy to, if you have any questions, you know where to contact me.
Yeah, JT, Steve.
Yeah, just again, thank you to Six. You guys always do a fantastic job putting these events on and giving us an opportunity to reach out potentially to a retail audience or investors that haven't heard our story. Great job as always. And from me at 5E Advanced Materials, just always appreciate the opportunity. So thank you. And thank you to the audience for tuning in.
Yeah, and I'll finish up. JT, Carlos, great comments as always. I love doing these types of things. Max, you guys throw a great seminar. I would just say, again, if you're an investor, you look at these things in one way and you take the longer term approach. I think that we can almost all demonstrate that we have a tremendous amount of value locked up in our shares. If it's a trader, it's a different kind of thing. I forget which fighter said, everybody's got a plan until they get hit in the face. Well, we just got hit in the face over the past 9 months. So now what do? If you think the value is there, you can increase your positions. I don't think over the long term you're going to be disappointed. There's going to be ebbs and flows as there is in anything, and we're going to climb a wall of worry. But we don't get involved in this part of the industry for S&P 500 returns, and I think you're going to be comfortably rewarded over time with a portfolio approach in this area. It's just my 2 cents.
Thanks again to everyone for participating, and I hope you have a great rest of your day.
Thank you.